Good morning, good afternoon, good evening. It's your boy Gary Scott, aka the Solid Pip Assassin. Guys, I'm back with another video. Um, if this is your first time watching my videos, if you watched them before, um, the markets can be very simplistic, right? The only thing that makes the market hard is the mental battles that we fight within ourselves, all right? And avoid trying to work on things that we need to get better at, right? To mentally be at the capability to be able to trade this at a high level. All right. And what I like to tell you guys through and through, right? The market truly has its way of operating. And once you understand the way that it operates, like I said, the market can become simple. The only thing that would then hold you back is your discipline, your consistency, and your patience. All right. And you have to be very good at all three of those things in order to be successful in the market, right? Mastering yourself, right? We're not perfect, but mastering yourself to a certain degree to where, right, you can be in a great position. Like I always tell you guys, every time frame, right, for every pair has a trend. And if you can properly trade the trend, for that time frame that you're in, then there's a great chance that you have a great probability of winning more trades than you lose. You will lose trades. It's inevitable. Nobody's a 100% trader. So you have to understand that and truly take that in so that way you can be successful. So what I'm gonna be showing you guys today is just multiple different ways how you can catch these trades. Just on, the 30-minute time frame, we can transition and go to the 4 hour. You can transition, go to the 2 hour. It doesn't matter. The same way that I'm showing you guys this on the 30-minute, is the same way you can go and attack it the same exact way on the 4 hour, 2 hour, the daily, the weekly, whatever time frame you want. Right. But yes, so first things first, right? We already know that there's three types of trends. There's uptrends, downtrends, and then ranging markets. To be quite frank, you only want to trade uptrends and you only want to trade downtrends. And there's a certain way you do that. All right. Now, how do we know, right? How do we know that there's a possibility that we go from a downtrend to an uptrend or uptrend to a downtrend? How do we know that we're moving in an uptrend? What price is going to do, right, is it's going to create levels in the market, right, where price creates highs and pulls backs, right? And when price runs past those particular levels, that's indication to let you know that price wants to move higher. All right. Now we have our point here. As we see, this was once a previous high. All right. Price pushed up. Well, price pushed down. In this case, right here, push down, creating a potential higher low. All right. What then happened is price pushed up again, creating a higher high. All right. Once price did this, all right, and it created this high, right? What price did was pull back to a deeper area of value, right? To clear liquidity beneath this level, right? So that way price can continue to move higher, right? So when price fell back down to this level, all right, all it did was come back to an order block. All right. And this is what we have to understand. All right. This is the deepest last down candle before price decided to change directions. All right. Here, pull back. Here, pull back. Price came to touch this order block, right? It's the last down candle before price shifted, right? Once it shifted, it retested, and all we need is a bullish candle to close above, right? But if this is not good enough for you, if this pullback is questionable for you, then, right, don't take the trade, right? Because what it ended up doing is it did break structure here, all right? But to kind of confirm that this trade is actually moving in an uptrend, we need to see price take out this high here, all right? In the moment that that happens, is the moment that we get our new high, and that solidifies that this uptrend is significant. All right, now price creates this new high. when it decides to retest, right? If you've seen my previous videos, I tell you guys, once price breaks structure, right, it's either going to retest back to its previous structure that it just broke, or it's going to find an area of value beneath this level. All right. So in this case, when price broke structure and it retested, all it did was come back to this fair value gap level. All right. Well, what is a fair value gap level, Gary? Well, if you guys can see right here, this candle has a wick at the very top. This candle's wick does not have a wick at all. All right, so from basically the two outside candles, if those wicks don't meet in between the body of that candle, that forces this to be a fair value gap level. All right, and as you see, when price got here, right, it respected it. It never closed below, right? All it did was reject this level and continuously give you bullish candles closing above. All right, so when that happens, right? We could possibly take our entry here. Our SLs will then go beneath where our areas of value. So in this case, it'll probably be like, let's say, 150 pips, right? That's what this is, 150 pips SL that we will probably have set for 150 pip gain, right? So it looks something like this. All right, that gives you your 1-to-1, but you know that you're aiming back towards these highs. All right, so that's your first take profit, right? That's your first take profit. And then this would be your second, right? What's 15 plus 15? 300, right? So you have a 300 pip, right? You have a 300 pip move that you caught for a 1-to-2 risk to reward ratio. All right, what happened to price? Price pushed up, hit that first TP, dropped back down near entry, and then it went up to hit your final take profit. All right, that's you taking your trade for a 1-to-2. All right, you make your money. That 1-to-2 puts you back above your high. You can go about your day, right? What ends up happening to price again is price ended up breaking structure, right? It broke structure, went past that previous high, right? And what did price do? It retested, right? But where did it come back to? After it broke its structure and it retested back beneath this level, it came back to the last down candle before price broke structure, right? The absolute last down candle before price broke structure. Usually it'll either be that or it'll be the last down can it'll be the deepest last down candle or the last down candle before price breaks structure. In this case, because price broke structure, right, it came back to the last down candle. Or in some cases, somebody could have just been saying it could have came back to this fair value gap, which is true too, right? But now you got to understand you have two areas of values in the same exact spot. You have an order block and you have a fair value gap zone that are in the same exact level. All right. So if I'm looking at this, right, and I see this bullish candle come back to this level and we got a little like peak of a close above, that's not good enough, right? But I just need to see a clean candle close above for me to take my entry. Now, if you guys notice how this strong candle came out and is practically right by its high, right? Risk to reward wise, this is not a good trade. All right, risk to reward wise because you got this candle coming back here, giving you this extremely strong bullish candle, right? And basically, this your entry would have been here, your SLs would have been way down here, and it would have messed up your risk to reward factor. All right. Now, what you could possibly do is, not take that trade, wait until another opportunity presents itself. You end up getting your breaker structure again, right? Let me see. 1 second, right? You end up getting your breaker structure again. You see how price creates these highs, right? So if we come at this particular level right here, right, you got your higher low there. This is your previous higher high, right? And then you have your new high, right? And then you have price retesting back beneath the previous breaker structure, like I told you before, right? That's what we want to see. We want to see price pull back, beneath the level of structure that it broke. Now, price, like I said, it's either going to come back to a structural level or it's going to come back to an area of value beneath the break of structure. All right, so boom, boom. Price came back to the last down candle before price broke structure. That gives you your order block, right? What you then do then is you see if you get a bullish candle closing above. If you do, you take your entry. SLs go beneath your what? Your area of value, and you are aiming for your highs. All right. We got a 250 pip move here, meaning that we at least need to have a 250 pip move here. That gives us our 1-to-1, and that 1-to-1 surpasses the previous high. All right. Your money's made. You go about your day. Okay. It creates this new high. It starts to consolidate. So whatever happened before the consolidation will tend to happen after. Not all the time, but for the most part, if you get a bullish move, a bullish push before consolidation, more times than not, you're probably going to get a bullish push after. All right. So that's how you can look at a uptrend when it comes to the 30-minute time frame on gold. If I'm being very transparent with you guys, um, the 30-minute time frame can be very golden when it comes to trading gold. Of course, even looking at the higher time frames, those always work across all pairs, right? But what I've noticed over the years is that gold tends to be um very golden, as I should say, when you trade it on the 30-minute time frame. All right, so that's number one, right? That's an uptrend. Price continues to flow, right? And then what ends up happening here? As we see, price begins to reach some level of resistance in the market, right? It tends to reach some level of resistance in the market. Price drives up, drives back down. It's having a hard time break. It falls down again. And then eventually you get that manipulation above. Now, what makes you say that that's a manipulation, right? Because if we look here, right, market loves to create patterns. And if you know what this pattern is, right? It's a double top. It's letting you know that there's a great chance that the trend is getting ready to change because it reached a certain level of interest, which is a structural level, right? Price created this double top. It then manipulated price and then it closed back below. All right. And because it closed back below, that could have been, a tall tale sign that price is looking to possibly shift. All right. If we notice, like, we have consistent higher lows being created on this side, right? Right? Consistent higher lows. We got a higher high. Sorry, bring that down just a bit. Right, we got a higher high. Right, we got consolidating markets here. You can basically really call these higher lows as well. Price pushes up, right? And this is a higher low. So the moment that a higher low actually gets taken out, right? The moment that price takes out this higher low is the moment that price solidifies its shift. All right. You got the double top, which is signs that price wants to move to the downside. You then get the manipulation because it knows when these double tops forms, people like to go all in and for the sales, right? But what it does is it goes and grabs everybody's SLs just to move down lower. All right. Now, once price breaks this, a lot of people like to call this a change of character. I just literally like to call it a break of structure. It broke structure towards the downside. And as you see, right, price continued to move in that motion. All right. It broke structure, created this level here, pulled back. Um, it pulled back to this particular candlestick, which is an order block all the way back here. Right. This was the last up candle before price cleanly broke structure. So price retested back to this level. All right. It retested back to this level. Price pushed down, retested back up, pushed down again. So now you're starting to get structure breaking towards the downside. All right. This is not an ideal market to trade in, like I told you guys before, right? But if we're looking at this, this is a sideways moving market. Now, what happened before that? A strong push. You start to get your consolidating market, and what ends up happening? A pushback continuously towards the downside. All right. So These lows got taken out through and through, right? But as you guys notice, the market is sideways right now. So you don't want to trade this. You want to see a breakout in a particular direction, in a clean break. All right. You want to see a clean break from this particular direction. All right. You can say it here. Boom. You got a clean break, not only here, but you also got one, right? But you also got one here. All right. You got two clean breaks towards the downside with this just one move swiftly towards that direction. All right, what ends up happening to price, it creates this low, right? And I'm gonna just pull these back out so you guys can know that's a lower high, that's a lower high, and this is a lower high. All right, price creates this new low, right? It creates this new low, it retests. Where did it come back to? In this case, when it comes to a downtrend, an order block in a downtrend is the last up candle before price break structure, or the deepest up candle before price broke structure. All right. So in this case, it's this candle here. Price reacts off of it and it gives us a strong rejection. And then you get a bearish candle closing beneath. Right. That's what you want to look for when it comes to trades. When it comes to selling in a downtrend. All right. That's what you want to see. All right. So you have a 200 pip SL and you at least need to have a 200 pip gain. Right. If you got that, you get your 1-to-1. You see how price operated. It goes into negative, will draw down a little bit, and then it flows towards your take profit and eventually takes out your lower low. All right. What do you end up getting? A new low, and then price decides to retest again. All right. When it decides to retest, right, what we started to notice is what? Price came right back to an order block. All right. This is one of the last up candles before price decided to break structure. All right. Price closed above and then closed below. All right. So it gave you a fake out and then it closed beneath. You end up catching your entry, right? SLs go where? Above that wick. And then now we can aim towards our lows, right? Because now our SLs are above this level. And we at least need to have a 1-to-1 or a 1-to-2 risk to reward ratio. And as you guys can see, right, if you follow through with this and you remain patient, this trade tend to work in your favor. All right. And but what do you start to know, right? We start to get lower highs in the market, right? Lower highs, lower highs, lower highs, right? Lower high here, lower high here, lower high here, lower high here. And then you got price breaking structure towards the downside, which is letting you know that price wants to move in that direction. You end up getting another low there. All right. Price pushed up, came back down, and eventually broke structure again. All right. It broke structure once again. What ends up happening, you get your breaker structure, right? You get your breaker structure. Price creates this double bottom and it pushes up, right? And because it pushes up and it takes out this lower high that we have here, right? Because that's what that is, right? It broke this lower high. So for the time being, you had a potential shift in the trend, right? Price took out a lower high, created a new high, and then it decided to retest beneath that level, right? You got a potential shift, right? But you just got to be focused. You got to pay attention to that. Price took out a lower high. And because that happened, when price created this new high and it retested, it came back to the last down candle before price change it, before price shift. So this will be your order block from wick to wick. All right. And what do you notice, right? If we look here, price is respecting this level. All right. It gave you a strong bullish rejection candle. You could have took your entry here. And of course, at that point, we at least need to go for a 1-to-1 or a 1-to-2 risk to reward ratio to make our money and go about our day. All right. So it would have been, something along the lines of entry right? Aim towards your highs. Whatever your SL is, your take profit needs to be at least that. All right. So it needs to be at least that. And if you see here, you got your 1 to 1, your money was made, you go about your day, right? If you want to go for a 1 to 2, you have the ability to do so. It's not guaranteed to hit, but as you've seen, it did hit here. It gave you a 1 to 2 risk to reward ratio. You went into profit, you came back to entry, and then you finished the move off. All right, guys. So hopefully, what I broke down to you guys today, hopefully it kind of made sense as to how the market truly operates. It's no guessing. It's using basically what the market already tends to give us, right? But being able to trade the trend properly for the time frame that you're in. But always understanding that the higher time frames rule all. All right, guys. With that being said, guys, I hope you like this video. It's your boy Gary Scott, aka the Solid Pip Assassin, and I'll catch you on another one. Peace.